Alright, welcome back. Let's do a quick update. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Before you do anything, consult them. Stocks, currencies, cryptos, everything. Extremely volatile. I bet a lot of it's manipulated. And don't invest anything you're not willing to lose or lose sleep over. Alright, let's talk about the geo macro, because it's becoming very, very important. And then I'm going to talk about gold and silver. And this should be an important update, so I'm doing it. And listen, it's going to be a wild summer. Let's just talk about what's going on. Alright, so the dollar share of global reserves tumbles to lowest since 1995, in like 25 years. And this trend is likely to continue because the East is rising, the West is falling, including the Euro nations. Like, with their lockdowns and everything, it's not going to work out. Like, I think people there have had enough. I mean, there's tractors dumping manure in front of Capitol buildings. That's in France, I believe. All right. So there's a lot of geo tensions going on right now. It looks like the East is expanding, and of course the sandbox, where all the oil is, things are really heating up over there as well. And I'm not going to go into details or anything, but these are big nations. And then, there's Iran and whatnot. They're bigger than I think most Americans realize, or even Europeans. And let's just say there's West forces and then East kind of trying to take control of that area. Meanwhile, in the Pacific and around those islands around China, things are really heating up as well. I mean, they have fishing boats surrounding islands, and I don't want to get too much into details, but things are definitely heating up globally as the rise and the fall of empires continues here. That's what it seems to be. That's what it looks like. Or the attempt, right? Because maybe the East starting to see the West as weak. And not just that, there's a port down by this nation over here that they probably want, so they don't want to give up that area in Eastern Europe. And they're moving heavy equipment in, very heavy, very serious. Okay. And then we have, like I said, the Eurozone, I don't know. I don't know how much longer that experiment's going to last. It's fairly new. It's only a few decades old, right? So, for the people who say the DXY is going to go higher, that might be a reason for it. Also, tensions breaking out. But that doesn't mean that it's going to make gold, silver, and commodities fall in value. Absolutely not. They could go up together. That's what people have a hard time understanding. As you can see, things are escalating fairly quickly. So, on top of all of that, infrastructure spending, another round of COVID stimmies, and then probably even more. And then yield curve control is coming. I've talked about that in my past couple of videos. It's coming. Right now, the 10-year yield's at 1.68. It could spike again. And if it does, they're going to do it. So this is really turning out to be the perfect storm for commodities overall and precious metals. More possible bailouts. Like, listen, I'm actually okay with this. Not that I owe anything. I'm just because I went to college for like a decade, like Van Wilder. The millennials, they have no purpose in life. They need to start families, but they can't because they have they have anchors around their feet called student loan debt with interest, and they're living in their boomer parents' basements. Like, not all of them, but a decent amount. So, and by the way, this is all owed to I'd say 90%. I don't know. A majority of it is federal, right? So they could just cancel it, and then that gives the younger generations a chance to, I don't know, have a family, buy a home, and that would boost the economy tremendously. Because out of that, you would get more productivity because people's credits may get a little better, and then they could go and buy homes, right, and start families. So I'm not against it. I mean, what I'm trying to say is it's not fair to the people who paid it off. It's not. But you should have been smart enough to know that they were going to do this. I think the debt's like over 2 trillion. So that's a good move. If he does that, it's a good move for him. And you know I'm no fan, but I think they're going to do it. So I don't know if it'll happen this year, maybe next, but they're doing everything they can to juice the economy, and they're going to do it. Now, of course, when they do this, very bullish for metals, even crypto. I mean, by the end of this year, it's looking like it's going to be like 10 trillion. And this is just basic. This is basic, like third grade math. You don't have to be a genius to figure out that it's going to push prices of commodities, homes, and everything to the roof, which is inflation. Okay? Now, on top of that, so as the East expands in and it causes tensions and fears, worries, and doubts. People flock to safe haven. On top of that, never in humanity history have we seen such amounts of money printing globally. And then on top of all that, I mean, this is crazier than I even thought. So, and I thought I was going to get pretty crazy, but the East are the ones who've been supplying a lot of the fabricated minerals and rare earth minerals and commodities. Okay, while the West has sort of, I mean, they're still operating, but at nothing compared to what the East has been doing. Now, if there's tensions, they might cut off exports, and then that forces the U.S., Canada, Europe to maybe ease regs and push for more mining, and maybe give them subsidies so they could do their Green Deal plan or whatever, their infrastructure build out, EVs, smart cities, and all that, right? They have to. I mean, you can't have your cake and eat it too. Like, you can't keep suppressing your domestic mining and what is it, resource development with high regs and this and that, while importing from the rest of the world when there's high tensions, because they'll cut you off. And that, like I said, it's a national security thing. So I'm thinking, I mean, if tensions keep rising, which they probably will, because they're not going to stop expanding. This is their time. This is their decade, their century. So the West has to do what it has to do to, I don't know, maintain order, stay in power. So they're gonna maybe ease regs on mining and maybe give them subsidies, boost that. They have to if they want to do their green plan, because believe it or not, in my last video, like I said, it's going to take more oil, it's going to take more commodities, and to build it out. So there's no way around it. So the East absolutely dominates the production of this space, and rare earths are many times seen as the East's strategic leverage. So exports of rare minerals destroy various supply chains around the world. They have done it before. J.P. Morgan continues writing, as with everything else, there is a trade-off, and it seems that the East has more to lose from limiting production of rare earths than it has to gain. Such action would choke off global supply chains and ultimately hit the East's economy. If it was that easy to shut off rare minerals, the East would have probably already used that power by now. That's what JP Morgan says. But no, I think what they're going to do is they're going to keep producing, but they're going to keep it in the East with the Silk Road. And then they're building out a self-sufficient economy where they won't need the West. They'll keep selling to the West, but goods. They'll sell them goods, but they don't need to sell the West minerals and all this, because we don't use it to make anything anymore like we used to. We're de-industrialized, the West. If the West was industrialized, then we would need the raw materials. The East is what is industrialized. And I've made arguments endlessly. That's where real economic expansion and growth is from. It's from industrial growth. It's not from people in cubicles. It's not from financializing everything. It's not from, I don't know, waitresses and baristas. It's not from all of this. It's not from flipping homes to each other. again, like if your home price goes up, okay, you sell it, then what? You have to go buy another one. You have to live somewhere. The new home you're going to buy, the price of that went up as well. So that's not wealth generation. Wealth generation is taking raw materials and turning it into something that not just your own nation wants and needs, but you need to export it to the rest of the world because then you could import other things you don't have and need to keep expanding, right? So the East dominates this, but I feel like they need more, and that is why they're expanding literally and physically. It's why they're building out a trade route all the way down into Africa, even to South America. And that's to pull the raw material out. Like that book, I've been advocating for people to read this or listen to it on Audible. Don't I listen on Audible when you're driving around. You can turn your car into a driving university. This book is very enjoyable. I highly recommend a good read. It's Economic Hitman. That's what the title is. It's one of the best books I've ever read. That's how things really work, and the East is doing that right now. And that kind of puts and connects the dots and puts everything into perspective of how the world really runs. All right. So with all these tailwinds, I mean, there's no way any amount of manipulation or anything. I mean, the rates rose and spiked. So yeah, it made metals sell off. And I showed you guys in my last video the correlation between yields and gold and silver, right? So here's gold. This is a monthly chart. Every candlestick's a month. The top was in, what, 7 months ago? It hit 2100. I know it's kind of getting a little sloppy here with all the drawings. I mean, this is just a giant bull flag right here. If we could just rebound, test all-time highs, that gives you the multi-decade cup and handle. And it's just going to shoot it to the moon. So looking at the oscillators, RSI's oversold. MACD's already crossed a long time ago. The monthly, I would say, is neutral. Slightly bullish, but neutral. But I think the weekly is what I'm really looking at. In the weekly, I had a buy signal 4 weeks ago. I started scaling in a month ago into my mining stocks again. Very good. The individual mining stocks have been rallying for the past few weeks. But they're still 40%, 50, some are 60. They've pulled back like that amount from gold's all-time high 7 months ago. This is the train about to leave the station. So if we start rallying, gold could get back up above 1780. I mean, that's it. The train is leaving the station, and you want to just be holding for the next year or 2 or 3 or 10, I don't know, and making mad gains, right? So essentially what I'm saying here is I think the bottom's in. I could be wrong. Consult your licensed financial advisor, but I think the bottom's in. Now, can there be a temporary dump or something? If the stock market really dumps, yes, but they're not going to let the stock market dump. They're not. They'll print another 4 trillion or whatever they have to. So because they can't reinflate it if it does. So I think, you know what? Let's say tensions globally on the macro trigger the stock market to dump. Maybe metals will rally. A good example of that was when Orange Dude fired missiles, like, I don't know, like a few months into his first term, right? And the gold rallied like $40 in like a couple days. So when there's global macro tensions, metals rally, especially gold, and it'll break out. And the manipulation, right? If there is, right, there's manipulation in all markets, I believe. It'll be a managed retreat, and they can't stop it. Listen, if they had absolute control, you wouldn't have seen this entire rise in the past couple of years in gold, right? Hitting all-time highs. So people who listened to me back in 2018 and 17, when I told them this is it, the time to start accumulating mining stocks, you did very well. You're up like I don't know, 10x on some of these stocks, 15x. It all depends when you got in. If you're late to the party, you're not late like that would have been the time to really get in for the massive wealth transfer. But where I think this is going, you're still not late. You're not late at all. Gold goes to $5,000. Where do you think these mining stocks are going to go? Okay, but it would have been better if you got in there. That's what I keep telling people. Like everyone always wants to join the private group when they see everything rallying. They never want to get in on when everything is selling off. Well, guess what? It just sold off for 7 months. Maybe this is the good time to buy the dip. And I'm still buying. I'm still buying. So, but I think once, we break out, we test all-time highs, maybe a little pullback, it's gone after that. Like you want to be, you want your portfolio ready to go. Like you have all your shares and your physical, let's say. But yeah, so that's my strategy, my theory. Can I be wrong? Absolutely. I'm just thinking out loud. So there you go. That's what I'm thinking. All right, guys. Go to my website, join the private group. $220, then $20 a month, and then check out all the other links. I post a lot of market stuff, all kinds of stuff. Anything I find interesting in some of my chat groups or my free newsroom, whatever. And stay safe. Have a happy Easter. And I'll see you guys next time.